What is the next Bitcoin, Ethereum, so on and so forth?
Yeah, I don't know for sure, but what I will say is that if you look at what it would take to have, say, a billion people use cryptocurrency, to have a billion people use blockchain infrastructure, right? If each one of those is sort of using it in the same way that we use social media or finance today, that's going to be creating probably millions of transactions per second for the blockchain. And you can see this if you just look at the transaction throughput of current large, financial, social media, or basically any large online application. And from that perspective, one thing that I've thought about a lot is what are the blockchains that could scale to that level, that could scale to millions of transactions per second in a composable native way. I think I've been on the record a lot saying that I think Solana has a real shot at doing so, which I think is really exciting. I think, there are other tokens out there as well that are aiming to scale quite a bit. Avalanche is one of them. But I think that is really the thing that I look at the most, because a lot of other parts of the crypto ecosystem are really important, but are also things that can, in theory, be improved for basically any blockchain. I think the core technology of it is something which is much harder to completely overhaul.
So Sam, given that Solana does have many qualities that supersede Ethereum, do you think it's possible for Solana's market cap to exceed Ethereum's market cap at some point? And if so, can we see that happen anytime soon?
It could happen. It could never happen. And I think that one of the things we've seen is, look, there's sort of the underlying blockchain protocols. There's also the tokens affiliated with them. And, there is certainly an extent to which these tokens can follow the adoption of the protocols that they're tied to. There's also an extent to which they can gain, mass adoption, even if their protocols don't, right? And, I think Bitcoin is probably the cleanest example of that, where it is by far the largest cryptocurrency and the most known cryptocurrency in the world. And that's not because people are using the Bitcoin blockchain for a lot of things other than Bitcoin. The Bitcoin blockchain is for Bitcoin. And so, which is a long way of saying, look, you could see mass institutional adoption of, ETH, the token, whether or not you see mass institutional adoption of Ethereum, the blockchain. And so it's hard to make a concrete prediction about what the pricing action of that will be. And on the flip side, right, you could see Solana fail to gain mass adoption on the blockchain side. I'm optimistic that there is real upside there, but that doesn't mean it necessarily will be realized, right? Maybe it has serious issues. Maybe another blockchain comes in and competes, or maybe no blockchains end up managing to get where we all think they have a shot at going.
Do you think Solana could be the base for more DeFi applications in the future?
Yeah, I think it absolutely could be. And I think that is one of the most compelling parts about it, is that it does have the potential to scale to the place where things are needing to scale to if blockchain gets huge. And it has the potential to host DeFi applications for hundreds of millions to billions of people on top of it, with a giant composable ecosystem. Again, that's not saying it necessarily will happen, but it could happen. And I think that's really exciting.
Well, generally, I mean, there are a lot of problems with Ethereum that Solana has fixed. One of them being, high gas fees, the low transaction rate. Do you think Ethereum 2.0 is going to fix some of these problems?
It's going to take a different approach to them. What it's going to do is use sharding, and there are pros and cons. That the pro is that it's easy to parallelize there, right? It's easy to get up a number of threads at once, each computing different things. And so that probably will bring down blockchain costs, bring down confirmation times quite a bit. The cost of this is that there won't be native composability between transactions on different shards. And so if you imagine taking a single order book and sharding it, it doesn't really work, right? Someone puts out an offer at 5,000 for one ETH, and then two people on two different shards both want to buy that ETH. They can't do it, right? Or at least one of them can't do it. So they're not on the right chart to do so. And so that sort of is the cost of sharding.
Okay, interesting. I want to talk about just looking at protocols at large. I've been getting this question from my friends who have a traditional finance background. They say, hey, look, David, there's no cash flow, there's no DCF to analyze. How do I pick a protocol to invest in? What are some of the other criteria that maybe they weren't taught in a business school to look at?
It's tough. And obviously, like, part of this is like memes, right? Like, that's not something that people are usually taught in business
No,
schools. But
yeah.
if you look at investing nowadays, not just in crypto, everywhere, memes are really fucking important, right? Like, they
Well,
drive
that's a
market.
great point. That's a great point, Sam, because like memes are like we were taught to stay away from hype. We were
Right.
taught to avoid the crowd. But that's exactly what the meme is.
It is. And I think that one of the things that we've seen is because of social media, for the first time, 100,000 individual unaffiliated investors together can be bigger than a pension fund and can move markets in a way which is lasting, not just a flash in the pan in some cases. Now, in some cases, it is a flash in the pan, right? And like meme stocks, meme tokens tend to be very volatile. They tend to be risky. And you should absolutely not put anything more than you're absolutely willing to lose into them. But it's an important part of modern investing is understanding meme cycles, and so I think that sort of is like one pretty important factor that I think doesn't get necessarily it's sort of time of day in business school classes. Outside of that, I think a lot of this is looking at future future protocol adoption. Looking at what projects might be building, how much value might be transacting through a protocol, how much fees might people be willing to pay to use that protocol in the future if it gets to the point of adoption that it could get to.
Yeah. I mean, talking about meme coins, what advice do you have for somebody looking at meme coins and not sure whether or not this is legit? Because what are some of the red flags or criteria you're looking for? I mean, take recently, for example, there's lots of examples, just off the top of my head, Squid Game coin. I watched the Netflix series. I loved the show. And then the coin came out. I missed it. I missed the 70,000% return in like a couple of days or whatever it was. And then it crashed to zero and got rug pulled. And some people lost all their money. One guy lost all his life savings. I mean, we hear these sad stories, but ultimately they bought into it. Nobody forced them to do it. What did they miss? What are the red flags they saw that maybe they didn't see that they should have?
Well, one thing, again, to note is never, ever put more than you're willing to lose into something like that, right? Like, no matter what you're investing in, it could absolutely go down by 90%, right? That is a risk, and that's a risk that you should be cognizant of. Putting that aside for a second, I think, and I actually don't know the details, but I think that the Squid Game token was not actually affiliated, formally speaking, with the Netflix series, right? It was just some guy who named a token after it. I'm not even sure that's exactly legal. Like, there may be some IP things going on there, which are not exactly kosher. But more generally, I think early on in the cycle of a meme token is quite difficult often to figure out whether or not it's going to be a rug pull, right? Like, I mean, it's just like often up to the creators whether to do it.
Yeah, I mean, in this particular case, I think the creators were anonymous or chose to stay anonymous. Is that a red flag? That's right.
And so you can't even judge their background. So one thing to look at here is, what does the supply distribution of the token look like, right?
Yeah.
Is there something like a creator or a founder who owns, 60% of the token supply? If so, and if you don't know who that person is and you have no trust in them, right, there's always going to be the risk that they rug pull, right? If they don't own any tokens and can't mint any more tokens, there's a lot less that they could do potentially to, gain value at the expense of the purchasers of the token. So that is one flag that you can look for.